Yo, yo, yo. Welcome back to the channel. It's been a while. It's been like a week or something. You know me, the most consistent YouTuber in the game. Sorry about that. Last week, I was just doing stuff around the house because my son's birthday party was this weekend. So he turned 3. So I was just doing stuff around the house, and to be honest with you, I kind of just tuned out of the market. It was a nice experience. I didn't look at any charts for the most part. I mean, I would pop in here and there, pop a tweet off here and there, but for the most part, just ignored everything and felt good. So anyway, for what you actually came here for, other than just dialogue about my life, I suppose, let's take a look at the market, the ES1 chart, shall we? Look, last time that we spoke, we were talking about how we were riding up into this rising wedge sort of look, and I believe it was right before the Fed meeting. Oh, oops, that is the midline. We don't want to move that. I think actually this wedge was like this because we were watching the resistance from this trend. Yeah, that was pretty much how we were looking at it. And so, yeah, I mean, what you saw happen was a break down and out of the rising wedge. On that last video, we were saying that we were relatively bullish in the short term, but as soon as we broke this wedge, we would turn bearish and expect a test of the midline down here. So the midline we will make white and thick, and that's exactly what happened, right? So you broke out of this rising wedge, and you had this this really quick run down to the midline. Let me go to a higher time frame so you guys can see that midline and how we have it drawn here. And yeah, so the way I have it charted here, and I mean, there's no like exactly perfect way to draw any trend because most trends will have some sort of variance to them. But maybe we've solidified a little bit more here that this is in fact how the midline should be drawn. No, I still like it with the double tap up here. Let me make my prices bigger so you can see a little bit better. Excuse me, sorry. All right, let's go here. All right. So now zooming in, let's take a look and see what we think is going on in the market. Because today you had a pretty big day. SPY was up 1%. Everybody was very bearish coming into. I feel like going into the Powell meeting, there was a lot of bearish sentiment, and then once you had the bad meeting for the rate hike, everybody was really in team bear after that point. But we knew that the midline was going to act as a form of support. You weren't going to just crash right through this midline because we've said over and over again that this is a really key level of resistance and support, historically speaking. And so it's just highly unlikely that you're just going to crash right through on one run. And if you do, it's probably going to be very violent, right? So you saw the support step in, bulls come in to protect this line, hypothetical bulls, that is. I mean, we believe in composite, man. We think that the whole market is controlled. So that's kind of how we look at the market. But anyway, so now what are we expecting? I will say that the 0.5 50% retracements have been very powerful in the market lately. I've noticed them act as a good form of resistance. So I do think short term, at least, you're going to see a pullback from this 0.5 Fibonacci. And I'm going to be targeting at least 37.63 all the way down to 37.39 on the bearish side of things. I think you're pretty much done with this run. I mean, you might pop over to structurally wash out a few more bears before you have this downtick. But if you at any point break below this 37.39 now, you are most likely to go down and test the midline again. And the thing about testing the midline again is that makes it even more likely that you're actually going to break down and out of this midline. And I would say that what you could be expecting in the market now is some sort of tightening of the overall what's the word I'm looking for? The overall volatility beginning to slow down, at least in the near term, because now if you continue to trade within this trend, what's occurring is you didn't come down and test the green support trend that we had down here at the bottom, which you've historically done every time this year whenever you broke down below the midline. You didn't do that before you broke back over. That hasn't happened yet. This is the first time that that's happened. And so it could be a signal that you're having the similar move right here to the upside of the midline, and you're actually going to be forming somewhat of a symmetrical triangle. Symmetrical triangle. Yeah, that's the word. I don't know why I was questioning myself there. That's definitely what's happening. And so it's going to get a little bit more choppy here, okay? And I don't know exactly what the timeline here is. This says that the apex of these two trend lines would actually be around November 15th through the 18th-ish. And obviously, if you break up or down at any point, that's a little bit more bullish. You can expect, or bearish, depending on the direction, and you can expect a more explosive move, right? And then the expectation from that point is, if you were to break up, I would fully be expecting a relatively quick move, actually, up to the resistance trend here. And then if you break down, a relatively quick move to the midline here, because that is now acting as support. So I'd say that short term, you might see a little pullback, but then the most likely scenario is that you continue to trade within this range for the next week or so. I'm not expecting this big bearish swing down. I'm not expecting. You can extend up here locally to your 707 Fibonacci. Correlates pretty well with this trend line. Perhaps it's drawn out a little bit more like this, right? And then from there, you're going to see some sort of decision point being made. And you can mess around and have like a double top occur here, so you can hit it a little earlier and then retest the trend. Let me maybe get a marker and draw what that would look like. If I knew how to use, if I knew how to use this application, so maybe instead of that hard move down, maybe it swings over like this, and then it kind of distributes down like this, and then you'll see what happens from there. I'm not really biased when it comes to this particular pattern, as you shouldn't be. It's not really representative of a flag or like a bullish continuation or anything. I do think that this look here locally is relatively distributive. So let me remove some of the stuff here. So I do see this move as relatively distributive, but there is still the possibility that this ends up becoming a more accumulative move, right? So you have this sort of structure form here before a move up as well. So I think locally you had this distribution play out, which isn't that surprising. And then you played out down back to the midline. Now, what you're looking for is, do bulls come in, support this move, right? You have pullbacks that bulls step in with high volume to protect, right? And you see continuation. You're not seeing high volume just yet on the bullish side. It looks like bears are in control locally here, but not so bad. If you look at this daily move here, it definitely looks like bulls came out to protect the line here. This is clearly just a reaction to the midline. So I don't know, if you're a fundamental analyst primarily, or if you're like doing TA and you're not considering this trend, I don't really understand, because now it's been multiple times that you've seen bulls come in and react here, and also you've seen high volume moves off of this midline from bears. So this is clearly a really significant line of support and resistance that we need to be watching. I know, here in the background I can see that we had the 08 fractal left over from a few weeks ago. You can see here, so this is a fractalized version of the 08 market crash. It's not exactly drawn, but you can see here that you're getting that choppy reaction that we talked about in this range. So look, technically speaking, this isn't the most surprising thing, right? Like, you're challenging a really key zone of support and resistance historically. So you're not going to just break through it and then have a super rally up to the next resistance trend way up there at I mean, what do you, like 4,200 ES1 or, 4,100 ES1, you're not going to have this super rally. You're going to come back and test it, which is relatively unfortunate if you're looking at the market through the lens of this '08 fractal that we've had drawn on here for weeks now, because now it kind of speaks to this fractalized version of that market event. And I'm not saying that I'm holding a bunch of weight in this, but you can see that, and even if you extend it back to the top of this move, I just kind of chopped it out here so that it's a little bit more accurate towards the end is what we were really focusing on. And I mean, but if you segment it, the moves are very similar historically throughout this entire bear trend. So it's just something to keep an eye on, pay attention to. Don't bet your freaking house on it, but, just make sure that you're paying attention to it, because I will say that this move, right, on the daily, and then we'll lock this here, just so that I don't move it accidentally. But, you do still have this distributive move locally here, and so, if we make the midline a little less visible, this does kind of look like just a potential for bearish continuation that's occurring here. And then, I mean, you have this historical support trend in green. We would still be looking at that as a potential support and not going, oh, this is all in '08, whatever. But definitely if you break this support trend and retest it and fail, so you broke it here and you had some testing, but you eventually broke back in. If you retest and then fail, I mean, that's a very bearish indication. It's like bulls have historically protected this line of resistance. You can clearly see 4 taps here. You broke below briefly here, but they ultimately supported again. So breaking this line, I mean, it lines up well with this fractal is what I'm trying to tell you. And I mean, it can happen later and whatever, and it's not going to end up looking exactly the same. But I'm just saying that psychologically, technically, the setup does make sense for that sort of move, so we need to keep an eye on it. That's all I'm saying. So that's pretty much the analysis. That's how I'm seeing the market at the moment. Sorry about the lack of videos. I'm not gonna promise anything because I don't have this super social media driven commitment to this at this stage in my life, but I'll try harder to make sure that I'm a little bit more consistent for you guys. But yeah, so just make sure that you're drawing out your trends, drawing out your fibs, paying attention to the levels that we talked about. I mean, look, this move here, you can say, is clearly looks like a Wyckofffian accumulation, right? And this looks like a backup. So you're looking for the support of this backup for a last point of support for a continuation of a market rally, okay? And I mean, you see it here as well, right? This looks like the Wyckofffian structure, right? Phase B distribution down here. You have the spring type action, and then a markup phase begins, back up for a last point of support, and a continuation up. But really, what matters is that the volume steps in, and you're able, especially if you come back up here and test these highs at 39.21 or so, that's when it's really going to matter that you have some bullish volume come in for a continuation of this move all the way up to 4,100 or so. What was that fib that we had, the 707, in correlation with the trend? Yeah, so 40.78, so maybe instead of that really sharp uptick, it's more of a drawn out process here. And I mean, we've seen that occur before, right? So just be paying attention to the key Fibonacci's that we talked about, the key trends that we've talked about. These are the things that we're watching. And I would at least just make a bars pattern of the '08 fractal and just have it in the background. Don't make your life revolve around it or anything like that, but just be paying attention to it, because the psychology that's wrapped into this chart, it does align pretty well. I'm just saying, I looking at the sentiment and everything that's going on, I like to kind of I have followers on Twitter and I watch people on Twitter, like a lot of influencers and stuff like that. and I will say that overall the sentiment is generally bearish at this stage. Okay, there, but it's possible, and I usually like to fade the public. I'm more of a contrarian for the most part when it comes to public sentiment, but it's possible that I have selection bias because my followers and the people that I follow are actually people who are tuned into the market and paying attention. So I have to consider that they can inherently be more accurate than what um, the larger populace and that version of public sentiment can be, if that makes sense. And I've never really gone through markets for the most part with this following that's kind of tuned in and people that I'm following paying attention. I was more independent and just dealing with it on my own and just kind of paying attention to what like normal people would say about the market and things like that, and use that as my way to perceive sentiment itself. But when it all comes down to it, the chart is really what matters. Those key levels of support and resistance, trends, Fibonacci's. That's really what it comes down to, because that's what creates the market at the end of the day, the price action. So with that being said, I added an extra 4 minutes of me just blabbering about nothing, and I hope that you enjoyed the video. I will talk to you next time. Have you guys listened to Her Loss by Drake and 21 Savage? I think that it's a good album. I think that Drake actually is like really trying to show up for the first time in a while. I think that he's been relatively lethargic and lazy. I think that Jimmy Cooks might have been a humbling experience for the boy, because 21 absolutely shredded him on that, and 21 is the hottest thing in the game right now. He's the most fun person to listen to. So maybe Drake was like, I'm really going to come with it on this album. And maybe that's why he's keeping 21 around him, so that he keeps his little competitive edge and is like, I got to keep this guy, at bay. Also, the Treacherous Twin song is kind of weird because it kind of sounds like they're rapping about each other, but in a tone like they would normally be rapping about a girl or something like that. But like you can tell he's like saying about his dog and his friend is kind of the thing. And 21 called, he said, I got love for the boy, that's my twizzin. So that's what he calls him. That's what they call each other, maybe twin. I'm sure I've heard Drake say that as well. So I think it's a bit of a meme. It's a very interesting song, because I think they're singing about each other. But anyway, there's another 2 minutes of nothing to do with the video. I hope you have a great day. I'm going to go watch the Saints game after I'm done making this thumbnail and everything. You have a good one, okay? Hug your loved ones, and best of luck on your parlays or whatever you might have going on tonight. Peace.